Russia and China settled their 90% of their 200 billion annual trade without using a single dollar. The dollar's share of global reserve has collapsed from 65 percentile to 59 percentile in 8 years. And 250 billion in frozen Russian assets just accelerated the biggest monetary shift since World War II. This is a structural transformation and it's backed by BRICS infrastructure, central bank gold buying, and digital currency rails that bypass shift entirely. Today I am decoding de-dollarization with the data that analysts are tracking, the 4 contenders that is replacing dollars and why it matters for your portfolio and what to watch in 2026. From 2016 to 2024, the dollar reserve just reduced from 65 percentile to 59.3 percentile. That 6% is actually representing trillions in shift from out of dollar assets. Russia is actually forced this transformation. They actually cut down their dollar reserve from 41.5 percentile to 13 to 18 percentile. That's like from February 2022 to February 2024. In the normal case, this will only happen in the range of 15 to 20 years, but in this case, it is literally happened in 13 months. In Russia and China trade, 90% of the transactions were done in rubles and yuan. India pays for Russian oil in rupees. Bangladesh pays for nuclear plants in yuan. This is not an ideology. This is just a survival for countries that saw Russian sanctions and thought we could be the next. There are 4 challenges that actually rank by adoption data. The first one is gold. Central bank just bought around 1000 tons in 2024. Emerging market gold reserve just doubled from 4 percentile to 9 percentile in a decade. In the case of BRICS nations, their reserve is around 6000 plus tons in gold. This actually indicates that we can't trust anyone, even US. In this case of gold, there is no counterparty risk and no sanction risk. The second winner is Chinese yuan. It's actually using CIPS payment system. That's literally 9.5 trillion yuan per day. That's around 60% year-to-year growth. And there is around 1,465 participants in 119 countries. Belt and Road creates structural yuan demand. It's a 1 trillion infrastructure financing across 150 plus countries. But yuan still only 2 to 3% of global transactions. The capital control will kill reserve currency potential, and this can't become a global if the currency can't move freely. And third one is BRICS Unit, launched in October 31, 2025, and 40% of it is gold backed and 60% BRIC currencies. It's actually designed for trade settlements, not replacing national currencies like IMFs and SDRs. But there is a problem in the de-dollarization. India literally opposed this concept and Brazil is at lukewarm state. Only Russia and China is fully committed. And fourth one is CBDCs. There is China's digital yuan. It's around 7 billion in monthly transaction already happening in the digital yuan system. In the Bridge project system, there is China, Hong Kong, Thailand, UAE all provide instant cross-border payments, no shift or no dollars. So almost 130 countries are already developing CBDCs. When it is live, bilateral trade without dollar become frictionless. So how does this impact you personally? The first case, less demand for US treasuries. That means higher yields and 2 to 3% added to all borrowing costs. And in this case, your mortgage, car loan, credit card or permanently become more expensive. And impact 2 is inflation. In the case of importing, US alone import 3 plus trillion annually. If dollar weaken around 20 to 30%, that means there should be an additional 20 to 30% import cost. Electronics, clothes, oil and all become more expensive in this case. And third and last one is investment rotations. The foreign investors will dump dollar assets. In this case, downward pressure will be impacted on US stocks and bonds. Meanwhile, gold, commodities and emerging markets will rally. Now let's do some reality check. Even though these are the new updates, why the dollar still dominates the market? The first one is liquidity, and 88% of FX transaction is still in dollar, but in the case of yuan, it's only 7%. And dollar is the most liquid asset in the world. When market panic, everyone will convert it into the most liquid asset, that is dollar. And second case, no viable alternatives. In the case of euro, it's already fractured and yuan has a capital control. BRICS can't agree on anything and gold can't finance trade at a scale. Next case is military and diplomatic leverage. Petrodollar persists because Saudi Arabia choose dollar for security guarantees. China can't offer that. And last one is network effect. Every global financial system is built around dollar. Changing that is like replacing the OS on 8 billion computers simultaneously. So in this perspective, dollar won't collapse, but it can erode from 59 to 55%, then 50 or then 45 or etc. This is not a collapse, that's actually marginalization, and it's already happened. Trump just threatened 100% tariff on countries they are imposing de-dollarization. Brazil's Lula already reacted. He just said that blackmailing with tariff is being institutionalized. Catalyst to BRICS Summit. India is hosting 18th BRICS Summit in New Delhi. It addressed the key decisions on BRICS Pay, BRICS Unit expansion, and NDB lending. Catalyst 3. Oil pricing shift. Saudi Arabia is already considering Yuan-dominated oil futures. If Saudi Arabia price oil in Yuan, even partially, that's a savings. Petrodollar is the foundation of dollar dominance. If there is a crack there, that actually means structural threat. The final verdict here is that in the short-term perspective, like in 2026 to 2027, there should be chance for dollar strength will shift from 59% to around 56 to 57 in reserves. In the mid-term perspective, like 2028 and 2030, dollar most probably below 55%, and CBDCs will provide non-dollar trades as well. Oil will start pricing in multiple currencies, and US borrows will run around 0.5 to 1% premium. In the long-term perspective, like after 2030, there should be a chance for multipolar currency system. There should be no single dominant reserves, and regional currency will blocks. The key insight here is that dollar will move from king to a participant, even though it will be still important, but it no longer undisputed. What are the actionable takeaway you can get from here? You need to diversify your currency exposure. Instead of holding everything in a dollar, try to allocate 5 to 10% in gold. Watch BRICS Summit happening in August 2026 and hedge inflation, and don't panic. It may take 10 to 20 years to get the transaction completely. The dollar's 18 years regime undisputed king is ending, but not tomorrow, but it is inevitable. Follow for more this type of content like macro aspects and crypto related content. I will be posting more content like this in upcoming videos. Feel free to subscribe. See you in the next video.